Hi everyone, this is Kathy Lean with BK Forex. In this lesson, we are going to talk about using the Crowdfighter trading strategy to trade Australian data. Now, we particularly like to use this strategy for Australian data because Australian data has the unique characteristic of oftentimes triggering a reversal reaction after the knee-jerk move. So oftentimes what you may see is a piece of data making come out very good. It will lead to a sharp rally in the Australian dollar, only to reverse before the European session begins. And this is the bread and butter of the Crowdfighter strategy. That is why, with Australian data, we trade the pure pair, which is the Australian dollar. Now, the Australian dollar is superior to trade for Australian data versus other currency pairs because there can often be massive imbalances due to the illiquidity of the Asian trading session. The Asian trading session is traditionally one of the quietest periods in the FX market. So while we oftentimes will have big releases during that time frame, because there tends to be a lull before European traders join the market or European and US traders join the market, what oftentimes you will see is that reversal that I was just mentioning. So it tends to create quick profit-taking flows that allows us to capitalize on a good opportunity. And the great thing about the Aussie dollar is because it is the pure pair, the major, it tends to have tighter spreads and good volatility, whereas the crosses at the time may have wider spreads and see crazier moves than the Aussie dollar. So that's why when it comes to Australian data and the Crowdfighter strategy, the best opportunity in our opinion is in the Aussie dollar. So here are the trading rules for Australian data trades. Like some of the other currency pairs, the range is determined by 5 minutes before the data and 5 minutes after the data. So basically, the time frame that we're looking at is 10 minutes. It's a total of 10 minutes, which sets the highs and the lows. Same rule as the other strategies, which is that we want to look for the reaction to the news to be at least 7 pips or greater. And the reason for that is because anything less than 7 pips means that it's a non-event. So the market doesn't care about that piece of data. So instead, we want to look for at least 7 pips, and that is where the open range will be determined. Crowdfighter is a strategy that trades against the initial move. So we're looking for a reversal. If it's a good piece of data, we're looking for a correction. If it's a weak piece of data, we're looking for a bounce. So we only trade against the direction of the move. Our stop is 17 pips. Our target is 12 pips. It's a negative risk reward, but we've got a high percentage accuracy on this strategy, which does leave us net positive. Part of the reason why we have such a high accuracy is because we're very selective about the events that we trade. When it comes to Australian data, the only events that we trade are Australian retail sales, the RBA rate decision, Australian employment numbers, and Chinese HSBC manufacturing PMI index. These are the 4 most market-moving releases, in our opinion, for the Australian dollar, and that's why we focus our trades in only these specific event risks. So now let's take a look at some examples. Starting off, let's take a look at the Australian dollar and its reaction to the September Reserve Bank of Australia monetary policy announcement. Now, first and foremost, the RBA announcement actually does not occur where the vertical line is. It occurs right over here at the 0030 candle because that's when we actually have the RBA rate decision. The vertical line just marks when we have the changeover to the next day, which is midnight. So what you can see is that the Reserve Bank of Australia has a monetary policy announcement. The knee-jerk reaction is a decline. Now, it's not a very significant decline. I would say it's about 15 pips or so, looks like. But nonetheless, that's the knee-jerk reaction. We have a decline in the Australian dollar. So you remember, according to our rules, the range is determined by 5 minutes before the data and 5 minutes after. So the range high is right around 93.05, and the range low is the candle of the data, which is 92.89. So once that candle closes, that 5 minutes has passed, we go long at 92.89. Does drop a little against us, and then it rallies. Now, it does not hit our profit target quite yet because it only rallies about 10 pips or maybe even less, maybe 8 pips, and then it starts to reverse lower. So it sells off, sells off, sells off, but it also does not hit our stop because its low is only about 84 and we went long at 92.89. And then when European traders join the market around 3, that's when we have the surge higher that hits our profit target of 93.02. And that gets hit right around 4 a.m. New York time. So that's how we would have traded the RBA rate decision using the Crowdfighter strategy to the long side. Taking a look at the short trade, this short trade is for the Chinese manufacturing PMI number. So you can see the big blue candle is the Chinese manufacturing PMI report. Obviously, it's a good number. Aussie dollar is rallying off of the data. So the 5-minute range high is set at 88.94. The low is around 88.76, it looks like. Either way, the next candle is when we go short at 88.94, and this is a very classic type of movement that you see after Chinese Australian data, which is we have a surge and then it kind of flatlines for a little bit and then retraces before it rises once again into the European trading session. But what we're trying to take advantage of in Crowdfighter here is that initial reversal. So we sell at 88.94, and so our profit target is at 88.82. And you can see about 5, 10, 15, 20 minutes later, our profit target is hit at 88.82. So in terms of the Australian dollar, let's take a look at how it performed in 2014. We've had about 20 trades in the Aussie dollar in 2014. And of those 20 trades, 79% were winners, garnering us a cash-and-cash return of 112 pips. If you leverage this 10 to 1, that's 10 times that amount. On a cash-to-cash basis, it's 79% accuracy, 112 pips on 19 trades in the Aussie dollar.